Welcome back. So we've got the pre-open session, which is starting to come up on your screens. It's all over the place, actually all over the place. Some 200 points lower on the Nifty. So 2 minutes more and we'll have a realistic picture. But Anuj is here, has hopped across from the next door studios. Anuj, good morning. What are you watching out for?
Morning, Prashant. Well, I think the rupee opening would be the most important because that I think in the forward market was indicating that we'll start above the 82 mark. And that's important because today we have a lot of macro headwinds. The dollar index, which when we closed yesterday was 110 odd, is at 112.1. So I think that is the most important trigger. Apart from that, of course, the dollar index, the indication is that it will open at 82.25. That was the forward market indicator, and of course there's this World Bank cut which has come for the growth forecast. 80 to 20 is what we have on the dollar rupee. So Brent crude, Prashant, you were mentioning that is also inching up. But if the trend is positive, then all of this will be bought. So that I think today is really the test of the market's texture, because if we are in an uptrend, then this would be as good an opportunity as any. If the index gives you 100, 130 point kind of downtake, FI still 20% long, 80% short. I don't know what they are betting on, because the market's been not giving them any sort of momentum, but they're still maintaining their short positions. There's heavy call build-up at 17,400 and 17,500, which is the congestion zone. Also because the 20-day simple moving average is at 17,472. So I think as long as this zone is intact, perhaps the risk reward is not in your favor to try a long trade. On the bank Nifty, the 50-day moving average is 39,045. And if you get an entry point here or after that, the 20-day exponential moving average, 50-day exponential moving average of 38,650, that is the zone in which the risk reward perhaps would be in your favor. And just one last point, keep an eye on the mid caps, because if the Nifty holds 17,200 like yesterday, the mid cap index, in fact today I won't be surprised if mid cap index is first to turn in the green. That outperformance is going to continue as long as the Nifty is above 17,200. If the Nifty moves past 17,500, then my sense is that the Nifty takes over from mid caps. If the Nifty falls below 17,200, then the mid caps will also fall. So that's why that's an important level to watch.
Okay, by the way, that's a sharp slide that we've seen in the rupee this morning. 82.22 now, so that's a 0.4% move just in the morning trade. That's a record low as well. So don't lose sight of that. But there are plenty of stocks in our own markets. The Nifty is choppy. You'd have to say down about 40 odd points in pre-opening. But stocks like Titan are looking pretty good. A very strong business update there. Hero MotoCorp is the second largest Nifty gainer because of the Jefferies upgrade. And then you have something like a Kalyan Jewelers that's also looking pretty good on the back of a strong business update there, followed by something like a Phoenix Mill. So we'll talk about that. For now, we'll just let the market settle in pre-opening. Cut is about 45-50 odd points. Ashish Chaturmota joins in. He's the Director Head Research at JM Financial Services to give us some cues in the F&O market. Ashish, good morning. Your thoughts on how to approach trade today and what are the individual stocks to look at?
Hi, good morning. So, as Anuj rightly mentioned that, 17,200 is going to be a, a test for the market. And if we, in today's trading session, if we continue to maintain, sustain above 17,200, then that is going to attract a lot of short covering into the market. But in case if we slip below 17,200, that's going to, create some kind of, pressure to the bulls. So we will be watching this level very closely. But looking into the structure of the market, it looks like there's a very strong possibility we might continue to sustain about 17,200. And if we do that, then we are inching up towards 17,500 to 600 kind of trajectory. So till now, since we have not breached it, all our trades are on the buy side, which are on a structural strong momentum. The first pick would be from the defense basket. Stock is HAL, Hindustan Aeronautics Limited. We have seen a very strong buildup of long positions in the stock, and after cooling off for a good 3 weeks, now we are seeing a good amount of long buildup as well as pickup in the volume activity. So keeping 2420 as a trading stop loss, we expect HAL to hit somewhere close to around 2600, 2650 kind of trajectory. So it's a buy. Titan post its commentary and the kind of numbers it has posted as was consolidating for good 3 weeks. Now we can see a strong upward momentum in the stock. So keeping 2540 as a trading stop loss, we expect Titan to hit all-time high and in the immediate short term can target somewhere close to 2700 levels. Larsen & Toubro Infotech in the IT space is showing a very strong base formation. So here one can initiate along, keep 4590 as a trading stop loss. On upside, 4850 would be my short-term target in Larsen & Toubro Infotech.
All right, thanks a lot for that. But let's get back to the big story, which is the rupee that has hit a record low right now, 82 versus the dollar for the first time. there are many export companies that perhaps could get impacted. Let's find out. Aether Industries is one company that saw a 7% up move yesterday. This is a company that gets its big chunk of its revenues, around 70% from exports itself. So to discuss how exports are looking and to get a sense of the demand situation, Aman Desai, the founder and director at Aether Industries, joins us now to talk about that. Aman, thanks a lot for joining in. You have 70% of your business that comes from exports. Just wanted to know, what is the split between US and Europe? And is there any impact that your business would see because of the way the rupee has slid?
Yeah, thanks, Sonia, for having me here again. Pleasure to be here. Yes, the rupee is faring badly, but in terms of the exports that we have, Europe is the larger chunk, I believe, about 70%. If we count the deemed export and the SEZ sales into India, which is on dollar invoicing, that is about 20% of the 70%. So of the 50%, I believe 30% probably is in Europe, and the remaining is worldwide, including the US. And to answer the second part of your question, we are not seeing any adverse effect on the business and the opportunities coming in. Rather, it is to the contrary. We are seeing a tremendous influx of opportunities, especially in the contract research, contract manufacturing space, where we see a lot of inquiries coming in from the Europe and US. And the dollar being strong in a way helps us because it's more revenues for the company then.
Right. Aman, just in an interview, I think about a week and a half back, you said that you're seeing tremendous capex going on right now, especially out of Europe because of what's happening there specifically, and that is a region which is attracting more and more inquiries, as you just outlined. Could you give us some sense and scale of what's happening there, and how big a trigger could that be if industries remain unviable because of high energy costs there for a business like yours?
Yeah, Prashant, great question. Yes, we are seeing a tremendous influx of opportunities from the European space. In terms of the capex, I was talking more about the capex of the specialty chemical industries that are happening in India, including us. A lot of companies are putting in a lot of steel on the ground and putting in a lot of projects in place and going through a lot of capex currently and upgrading themselves and designing themselves to become ready for catering to this increased demand from overseas. And Europe is interesting to see how this plays out. Hopefully the war will end soon and the scenarios will become better for the world. But in terms of the current scenario that is existing in Europe, in terms of the energy crisis and the gas prices going up and the costs going up, we are seeing an influx of opportunities related to this scenario currently, where companies are telling us that they are kind of evaluating outsourcing research and development and scale up and manufacturing opportunities to us because of the current crisis that is going on. And once this shift happens, that it's more or less irreversible. It will not go back. And so you will see more opportunities coming into India. Currently, to us, we see that, and to the rest of the specialty chemical industry in India also, I'm sure they're seeing that, and that's a good thing.
Okay, hi Aman, morning. So you're saying demand is strong. You have a lot of opportunity out there in the global markets as well as India, and demand is pretty strong. But the focal point is the rupee. So let's get a couple of numbers out of the way then. We know exports is close to around 70% of your business. How much of those exports are dollar denominated? Irrespective of where it's sold, how much of it is dollar denominated? And also, you'll be sourcing raw materials from various parts of the world. How much of that as well is dollar denominated? What I'm trying to understand is, a weaker rupee, net, is it positive for your business? Go ahead.
Yeah, so Nigel, great question. And I might be a little bit weak on these numbers, but let me give you an idea. 70% exports, I believe 95% of that is dollar denominated. And so 95%, so almost all of our exports is dollar invoiced. And in terms of the imports that we have coming in from Europe and Japan and China in terms of raw materials, I don't think it's more than 25 to 30% of our net raw materials are imported, and these are dollar invoicing as well. And so, as you can see from these numbers, obviously the raw material costs are much lower than our selling invoicing numbers. And so there's a natural hedge that we have. We are not very much dependent on imports of raw materials for our raw materials. And so there's a natural hedge that we enjoy in terms of the dollar being strong, and net, it's a significant betterment in our numbers because of the dollars not doing so well.
Aman, if things stay the way they are, then there's a bit of a tailwind for your business because of the weaker rupee, say in the second half of this year?
Yes, you could say that, and that applies the same for other specialty chemicals industries in India as well, who are currently enjoying the export business. But yes, absolutely, we will see a reasonable uplift in the numbers of our company in the later half of this year.
Okay, so on the top line, can you give us some numbers? You ended FY22 with a strong 30% growth, and you were just telling us there's a big capex that the specialty chemical sector is seeing. You're seeing a lot of inquiries in the contract manufacturing space as well. Where do you think you can end the year, FY24, and perhaps what could the compounded growth be over the next 2 years?
So we will see a reasonable growth in this year. The first couple of quarters have been a little soft because of the global softening of the pharmaceutical market, and more than 50% of our revenues are derived from the pharmaceutical industry. And so the first couple of quarters have been soft, but we do have the Site 3, the new greenfield manufacturing site, coming online, and it's on track and on schedule to be launched in December this year. And so the last quarter of this fiscal year, we will see revenue inputs from the new greenfield manufacturing site. The dollar will help us. The CRAMS opportunities are increasing. And so in terms of the CRAMS business model, which is about 12% of our overall revenues, a 70% EBITDA margin product, we will see improvement in the numbers of this.
Could you give us a number on CRAMS? Where is it headed, Aman? From 12%, where is it headed?
So to give you an example, the entire last fiscal year, our CRAMS was 50 crores of revenue, which is 70% EBITDA margins. The first quarter of this year itself, we hit 20 crores. This current quarter, we'll be hitting 20 crores as well. And so we'll be looking at almost 70 to 75% increase in the CRAMS revenues in this year as compared to the last fiscal year. And keep in mind that these are pipeline molecules and launch molecules that we are working with innovator companies across the industry spectrum, across the globe. And these will go into manufacturing over the horizon of between 2 to 5 years. Okay. And when these molecules go into manufacturing, it will be a very interesting scenario for the company.
All right, Aman, we've got a few numbers from you to understand business on the whole. Post your numbers, you could join back in, and then, we could quiz you a little bit more. But we get the gist. Weaker rupee, good for you. Tremendous potential, and CRAMS business surging higher from here on. Good speaking to you. Well, let's get back to the markets then. And Sona, you're tracking a report that came in from Jefferies on autos. They're sounding fairly bullish.
There's a big upgrade actually that has come in from Jefferies on the auto sector, and they say that they expect a very strong 17 to 19% compounded volume growth across the board for passenger vehicles, two-wheelers and trucks over FY22 to 25. Falling metal prices will also help lift margins, and they expect a double-digit earnings growth for most OEMs across the board. Their preferred buys, Jefferies, is TVS Motor, Maruti, Eicher and Tata Motors. They haven't underperformed on Motherson and Bharat Forge, and they have upgraded Hero MotoCorp to a buy with a target price of 3,000. So that's a big upgrade coming in on the entire auto pack from Jefferies. But keep in mind that a lot of these stocks have already had a big rally recently. But Titan is the other one on our radar. Big move this morning on the upside. Mangalam has more on that. Mangalam, people buying more jewelry.
People buying more jewelry, and that too in lean periods. So one can only anticipate better sales coming in the festive period. That's what Titan says. 18% jump is what they've seen in their overall business, but 18% jump is also what they've seen in their jewelry business. And this comes on a high base of 66%. So that means that the 2-year compounded growth rate for Titan's jewelry business has been over 40%. 3-year, if you compare it with pre-pandemic level, has been 25% as well. They've been gaining market share. They've been talking about that as well. And that is something that we saw even at a much higher base. The growth has been much higher than Kalyan Jewellers for Titan, especially in their India business. Importantly, we did see a higher share of revenue coming in from the higher margin diamond jewelry. So as a result of which the studded ratio has improved as against last year, still lower than pre-COVID levels. But again, nevertheless, that would be good for the street considering the margins would improve on account of higher studded ratio. They have an optimistic outlook for the festive season. They've opened 25 new jewelry stores, 91 total stores for this quarter. And the other verticals of the company are actually firing well as well. Watches grew 20%, eye care grew 7%. Other businesses, which include the fragrances as well as the sari business, grew 58%. And in that, in particular, the sari business grew 114% in the second quarter. Carrot Lane, which is the online jewelry, also grew by 56%. So overall, doing extremely well for Titan in the second quarter.
Right, just opening 8 seconds away now, and the rupee, will rupee be the head in the market, the stock market be the tail? We'll find out which one leads the other. Sonia. Absolutely.
So the first tick, Prashant, is absolutely quiet. So down just about 40 points on the Nifty. Okay, it is getting a bit worse now, about 50 odd points. What's dragging the markets lower this morning? The Bank Nifty, by the way, is down almost 260 points. It's all your banks. ICICI Bank, HDFC Bank, Kotak are down anywhere between half to about 1% Hindalco is the big loser this morning, down 1.5%. In fact, it has the other metal companies on its list. So JSW Steel is down about 1%. Tata Steel is down, as Rakesh was telling us. Tata Steel's Q2 numbers expected to be on the weaker side. And then you have some of the auto stocks coming in for a mild bit of profit taking. Nothing alarming. Tata Motors, Bajaj Auto down about 0.3%. BPCL as well is down almost about 1%. So keep that in mind. What is bucking the trend this morning? Titan, clearly your top Nifty gainer right now, up 4% on the back of a very strong business update. Hero MotoCorp is the next Nifty gainer, up 1.5%. In fact, Hero and Maruti are your big auto gainers right now. There's an aggressive target price of 3,000 from Jefferies on Hero MotoCorp. So it's charging ahead. M&M is also flat with a mild bit of positive bias. Then you have some of the pharmaceutical names, Apollo Hospital, Cipla, are all trending in the green. But otherwise, it is a bit of a lackluster start to trade. It's nothing alarming really. A 50-point shave off is what you've seen on the Nifty. The mid-cap index, in fact, is in flat terrain. So on the fence a bit over there.
All right, Sonia. Well, a few stocks actually to note from the broader markets as well. Torrent Pharma is down close to around 1.5%. The US FDA has issued 3 observations to its Indrad facility. So that stock is down now close to 2%. Dabur posts its quarterly update. Well, that one as well has opened on the back foot. But remember, it's underperformed the last few sessions. As Mangla mentioned, maybe we'll see some bit of covering from the day's low. So keep an eye out on that one, given that second half of the year could be good. Other stocks that are reacting to their quarterly update. You have Equitas Small Finance Bank. Well, that's opened up well in the green. Ujjivan as well is up close to around 3%. So a strong showing out there. You have Kalyan Jewellers. That's the other one that came out with their quarterly update just an hour or so ago, pre-market. So that one as well trading well in the green. Titan is higher. Kalyan Jewellers as well as higher. And a couple of other names like a Reliance Infra. Well, that stock as well has opened in the green. It's getting a little bit worse though. The mid-cap index has now moved into the red and we're down 0.3% after trading briefly in the green. The Nifty Bank has removed, that 50 DMA support. It's now trading sub the 39,000 odd mark. And for me, that's going to be the crucial factor today. The joker in the pack. Can the Nifty Bank see a recovery from this 300-point downtake? The rupee as well plaguing, the markets in today's session. Prashant.
Like yesterday, Nigel, banks are the problem area. Banks sold off quite aggressively. The index ended under 0.5% high yesterday, but it was a big climb down from the day's high. By the way, the Nifty Bank is broken below its 20-day moving average as well, which I think is at about 39, slightly under the 38,933 or so. So we are under that now in terms of the 20-day moving average for the Nifty Bank, which is the reversal kind of level. The Nifty itself is down about, 46 points. So it's not a large cut. 53 now. It's not a very large cut, but it is a fast-changing screen. If you can have the Nifty and the dollar rupee together, I think that will give you an idea of what's going on. This is clearly coming in from some of the global factors, which is oil, that feeding through to the currency, and that feeding through into nervousness into the market as well. I mean, to be fair, it's not as if overnight we had a great handoff from US. There you go. That's what I'm talking about. So 0.5% on the dollar rupee higher, and 0.25% lower on the Nifty is what we have. I mean, pressure, much larger pressure on the currency at this point in time. A few more names in the broader space. So we've got 900 stocks higher and 844 lower, but very early days to look at advanced decline and derive anything very meaningfully. Titan is up 5% as we highlighted, so that's at the day's high. 27.20 or so on Titan. Hero MotoCorp is up about 2.33%. Sonia mentioned that earlier. There's a name like HBL Power is coming up with volumes. Only reason I'm mentioning that, 4%, it was up 6% yesterday. Praj Industries was a mover yesterday. It's up another 2% right now. JSW Energy was up 10% yesterday. It's up another 1.5%. So these are follow-through moves that we are getting. So important to note, Nykaa is up about 1.6%. There is Trent, which is up about 1.8%. ABFRL, the retail name, that's up 1.8%. And we've got Ujjivan Small Finance Bank, which starts about 3.33% higher as well. So this is overall, I mean, the picture, 20-25 points lower, wait and watch, as I said.
Actually, even the minor dips are getting bought. I mean, the mid-cap index is now in the green, right? And so is the Nifty. It's cut its losses quite a bit. And it's all your domestic-facing stocks, Titan, Hero, Maruti, Bajaj, not so much Bajaj Auto, but the domestic consumption piece is thriving, and even amidst the global chaos, that's, I guess, a safe haven.
Absolutely. I mean, consumption ex-staples is doing just fine. I mean, actually, not just fine, is doing very solidly well, and that is showing up in prices as well. So this is a flat start, I would say, neither here nor there. Almost a holding pattern until I guess we get data points which are lined up ahead over the next 24 hours or so. Rahul Singh is our market master of the day. He's Chief Investment Officer, Equities at Tata Mutual Fund. Rahul, great to have you with us here. Thank you very much for being with us on CNBC-TV18. First thoughts on markets near term, Rahul. We are down, but far outperforming, emerging markets, Asian markets, and of course, I mean, the G10 big global developed markets as well. Will the outperformance last, even if the market weren't to do very much on the downside, or you think there is downside from here? What's your sense?
Yeah, hi. I think let's take a step back and actually nothing much has changed in the last 3 months. The global macros still continue to be uncertain. The interest rate trajectory continues to be upwards. At the same time, if you look at our domestic economy, I think there are enough signs that there is credit growth coming back. The cyclicals are doing well. So essentially, it remains a tug of war between the domestic cyclical recovery in various data points which we continue to see, and the uncertain global macros. And I don't see this changing over the next 3 to 6 months either. So which way the needle will swing more is difficult to say, and I think the critical point remains crude prices, because that is something which affects India's macros and India's macro parameters much more than maybe the other emerging markets. And I think that remains a key thing to watch in deciding or in determining which way the needle will swing. But as things stand today, I think there is enough and plenty of data points suggesting that the domestic economic recovery and cyclical recovery on the capex side, on the real estate side, is pretty solid, and I think that's the heartening part. But that obviously cannot completely negate if the global macros continue to deteriorate, and so we need to keep a close watch on both sides, frankly.
Okay. By the way, forgot to mention that Varroc Engineering, the stock is under pressure now. Actually, it's down almost about 4% after that deal. The value of the deal has come down quite a bit. So Varroc Engineering now 3% lower. Keep an eye out on that. Talking about autos, Rahul, thanks for joining us on CNBC TV18. Wanted to ask you a little bit about your view on how to approach the auto sector. Anyone and everyone is bullish on it, and there is a multi-year bull run that people are now talking about. Is that a very simplistic argument given the kind of disruption that we could see in this space, and how does one approach it?
Yes, it is simplistic because autos is not just one homogeneous piece. I mean, it is comprising CVs, tractors, two-wheelers, four-wheelers, auto ancillaries. So every segment to itself, and the fundamentals are panning out to be quite different. In some cases, there is a top-line lift, or there is a cyclical lift, like in CVs, whereas in others, it's more about coming off a bottom in terms of the lack of growth which has been there last 3 to 4 years. And in some cases, it is just just wishful thinking in terms of the fact that the sector has not done well, and the stock should do well now. But there is really no substance in some of those stories or some of those theses. So really, we need to take a more bottom-up approach, frankly, in autos. It's not very easy to take a very homogeneous approach, like it is easy to do it in, say, in the case of banks or in the case of IT services. You can take a more uniform approach across the sector, and you may not go wrong even if you pick a mid cap versus a large cap, or a X segment versus a Y segment. Whereas in autos, it can be completely different. So that's why we don't tend to treat autos as one homogeneous segment.
Hi, Rahul. Morning. I wanted to focus a little bit more on the consumption theme. We've had a couple of numbers that's coming in there, and discretionary spending, it hasn't really got pulled back, at least till now. And the view is that maybe given that the festivities are there in this third quarter, things could look up. What's your view? How would you approach this theme? Because, You have Godrej Consumer that came out a little bit disappointing out there. Dabur was a little bit disappointing. However, Titan, Kalyan Jewellers, great updates. How do you approach the space?
Yes, I think there is a dichotomy between the urban and the rural consumption. If I were to simplify what you're saying, although things are hardly that simple, we are seeing that the urban discretionary consumption is pretty strong and pretty solid, and it's not only showing up in consumer but in other areas like travel, leisure, airlines, etc., in various segments. Whereas on the rural side, there is obviously a moderation or a slowdown, which has been persisting for quite some time if you look at the commentary of the FMCG companies. So clearly there are two large kind of segments which are showing very different trends. We think that will start narrowing. This difference will start narrowing sometime in the second half with the rural coming back. But the valuations in the space overall means that we will have to back growth on and companies or sectors where we see growth surprises are possible. So instead of simplifying these themes, I think our focus and investors' focus should be on identifying companies, even if it's in urban consumption or rural consumption pocket, companies which are executing well and which are able to surprise on the positive in terms of the growth trajectory which they are demonstrating. And that is how I think the consumption space should be approached, because if you look at the interest rates going up and if the overall thesis that with interest rates going up globally and in India over the next 3 years, you will see some moderation in valuation and some excesses in valuation. We need to be extremely choosy in the consumer sector. But India is a large market, and there are companies which are able to grow fast with either great execution, market share gain, or just gain from the unorganized sector. So there are opportunities. It is not, I'm not trying to suggest that there are no opportunities, but there are a lot of opportunities available still where companies are executing quite well in various spaces across the consumption spectrum, actually.
Rahul, is there any broader kind of macro-ish risk here with what's happening with the rupee? It's kind of fallen to about 82.20. Oil, according to many who watch the space, is headed higher again. Reasons are lining up. Is there export? We got the export numbers, which has been underwhelming, right? I mean, even excluding oil, which is a big source, which is the biggest import, our exports have not been doing all that great. So there is a bit of a gap, and that the risk is that could increase the deficit. Are those kind of things going to come to kind of plague the market at some point? And what's the risk? What's the probability of that, in your opinion?
No, as I mentioned, the probability of things going into a tailspin on the rupee or on the external account or the BOP is basically going to be a function of commodity prices, and more specifically crude prices, because we are a net consumer of crude and various other commodities. So we need to obviously keep a watch on that, and I think geopolitics also will start to play a critical role. Is already playing a critical role, but I think it's going to become more and more important for us to take a call on that, and therefore it becomes a difficult call to take. It is no longer about demand and supply of commodities or crude oil. It is more about what's going to happen geopolitically, how's the OPEC going to react to it, and so on. So will they try and protect the prices? So that is the single biggest factor which could go against India. And as I was mentioning earlier in response to, I think, the first question, that can decide the swing of the needle, which way the needle swings more. Because right now, it's a tug of war which is fairly equal between good domestic micros and not so great global macros or deteriorating global macros. Right now, it's a tug of war which is not moving either way too much.
Just a quick word from your and Rahul on the IT sector, because now the opinions are changing. People are saying perhaps it's a good time to be buying IT stocks after the fall that we've seen. Would you concur with that view, or are you still cautious?
I think some relief has come by way of the USD INR movement. Although I think USD INR movement is never a good reason to buy the sector. In the past, if you see, periods when INR has depreciated, it's not that the sector has performed. So I think it's a little bit early to get too excited by just the currency movement on the sector. I think the large caps are placed well because after every recession or after every slowdown globally, the outsourcing increases, and these large cap companies or the large cap IT companies who get to share much more in terms of the large orders which get given out after any major recession when the global MNCs start to go on a new cost cut drive. So I think the sector will come out looking well. But in the next 3 to 6 months, given the uncertainty on the budgets, and now that we are entering the period when some of these budgets will be decided, will I think might throw up some negative surprises. Not major, but I think some negative surprises we should be prepared for. So we are, I would say, underweight on this sector relatively compared to what was the case, say, a year back. At the same time, it is a sector where we need to keep look at the large cap IT names much more closely and take these dips or take these periods of uncertainty in terms of demand environment as an opportunity to accumulate and maybe keep the weightages at these levels definitely.
All right, Rahul, thanks so much for stopping by and giving us your quick view on the markets and sectors you're positive on. By the way, the markets have moved to the low point of the day. As I said earlier today, the Nifty bank, the crucial mark was the 50-day MA. That comes in at around 39,050. The Nifty tried to pull back numerous times to that level. And then, in fact, we did see some selling. So just keep an eye out. Now we're at around 38,850. That's 200 points away from the 50-day MA. That's a big cue for you. And the mid-cap index, for the first few minutes, it went into the green, but that's quickly got sold in two as well. So testing times for the markets, the rupee as well has weakened nearly around 45 paise. So that as well, a bit of a negative sentiment. But we have been getting quarterly business updates that are coming in from various companies ahead of earnings season. Today, we're looking at two small finance banks. While Ujjivan has seen strong business momentum while with declining stress, Equitas has held absolutely steady. To discuss how business is shaping up, the products as well that are driving growth, well, we are joined by Mr. Ithara Davis, the MD and CEO of Ujjivan Small Finance Bank, and Mr. P.N. Vasudevan, the MD and CEO at Equitas. Well, good morning, gentlemen. Thanks so much for joining in. Well, let's talk about Ujjivan's business first. There's been a good bounce back. So, sir, how do you see business shaping up? And if you could tell us, where are you seeing maximum traction coming from? Go ahead. All right, Mr. Davis, I request you to unmute yourself. We would like to hear.
Sorry. Good morning, Nigel. It's good to be back with CNBC. I think we have seen very good traction in this quarter. And when you compare it with the same quarter the previous year, which was the end of the COVID, it's looking very good. And also on an absolute basis, the growth has been very good for Ujjivan. We have seen the maximum growth in this financial year, the first 2 quarters. It's coming from the microfinance business because that was the business which we had seen moving faster. And it's a business which has been able to grow quicker for us. But the other businesses are catching up. So that generally is the trend that we have seen. And we expect that trend to continue for the remaining 2 quarters of this year.
Okay. Mr. P.N. Vasudevan, who's the MD and CEO at Equitas Small Finance Bank, is also with us. Mr. Vasudevan, your views on what the growth could look like? The loan growth has bounced back for you, it's been stable. For Ujjivan, it's seen a good growth. But overall, what are the trends pointing out to, and what could be an average growth that you're looking at for the next 1 to 2 years?
Good morning. Pre-COVID, our growth rate in advances used to be around the 30% mark. And now that we are more or less out of the COVID scenario, we expect to get back to that similar 30% kind of a growth rate as we go forward over the next few years. This year, we have had a 20% growth in the first half. But we do still expect that by end of the year, because the second half generally is a much more robust period for loans. And so we expect a stronger growth in the second half. And so we estimate that even for the current year, we might end up around the 30% level by end of the year.
30% by the end of the year. Right. Sorry, Mr. Davis, is the microfinance business the one which is... Sorry, I missed that if you kind of did answer that. But is the microfinance business doing extremely well? And is that an industry-wide phenomenon that you're seeing?
Yeah, I think I would say it is industry-wide because the microfinance business went through a lot more stress than the other areas. So the coming back is a sign that that business and that segment is able to recover. So I think, we, for example, in Ujjivan, we started the recovery in September, October last year. So this is the conclusion of 1 year of that turnaround. And we have seen during this 1 year that the microfinance business, for us also, it is a business that we know very well. So perhaps that is also one reason why we have been able to move faster on that front. But definitely it has picked up much faster than the other businesses because the other businesses were less affected. Because if you look at the year-on-year growth, it is about 44%. But, the other businesses were slightly less because of the way in which the segment has grown. So yes, to answer your question, I think for us and for the industry, there's been a good turnaround in microfinance.
And there's lots of expectations from other MFI players as well that things are going to be bandhan, etc. I mean, there's expectations running high. Mr. Davis, just one briefly, if you can tell us, how does this square, the very strong showing in the microfinance business square with the general commentary or anecdotally, when we speak with many companies, they say that the rural is still perhaps hurting, lower end of the economy is still not picking up, not doing well. And you got the MFI business, both individual and group, which has done very well for you. And you're saying it's an industry-wide phenomenon. Briefly, if you have any comments to offer.
I know we have 110 branches which are located in rural areas, and even some of our branches which are in semi-urban areas cover the rural segment. So we are not seeing, even in that segment, we are seeing very good traction. We are not seeing any stress, build up or anything of that nature. So I think, perhaps it's lagging the rest of the microfinance, but I think, there also we are going to be seeing a good growth going ahead. So I think that is beginning to happen and it should continue.
All right, Mr. Davis, could you put a number to it? What kind of a growth number are you looking at for this year? And also, input costs are going up. That's deposit rates would be moving up as well, cost of funds basically. How does that square in terms of your NIMs? I think in the last quarter you were in that 9.5% odd. What's the outlook from here on?
Yeah, in terms of overall growth, we continue to maintain our number of 25 to 30% for the full year. So that shouldn't be difficult to achieve. As far as NIMs is concerned, we are managing the NIMs around the 9.5, 9.6%. And we expect that, given that we are having good recoveries from the NPAs and, all the other front, that will help us in managing the NIMs as well for this year. And that is very fortunate because in a year when interest rates are rising, we are able to manage that. And I think that will get us over the hump, so to speak.
Okay. Is there any merger on the cards, Mr. Davis? Any merger with another lender is an option that perhaps you're looking at?
Not just as yet, because we are going through the reverse merger process. Once the reverse merger is completed, that is a possibility that we would talk about.
Okay, so what is the timeline? When will the reverse merger be completed? And if you're looking at a possibility of a merger with another lender, anything in the next 12 months itself?
The reverse merger will itself take about 12 months. So I think only after that, we will get into a review of that possibility.
So that is on the anvil once this gets over.
Once the reverse merger is complete.
All right, so 24 months then, not 12.
Yeah, 12 months to start the process and to complete it maybe a little longer.
Anything else you can tell us, sir, Mr. Davis, at this point?
No, I think, one of the most interesting things for the industry is today is this month is 7 years since the RBI gave out the 10 differentiated banking licenses for SFBs. And I think, CNBC could carry a story of how SFBs have contributed towards financial inclusion and financial literacy in the country, and I think that will be a good story. Just by way of comment.
Congratulations to all of you. Absolutely. No, but anything on this sort of merger that anything else you can at this stage? I mean, what's the thought process broadly? Can you share with us?
No, it's still very early, and we are trying to grow our secured book. So anything in that direction would be looking at something in the secured space.
But I mean, I'm sure you'd not want to give us any names at this point in time. But what would sort of the size be of the entity that you're looking to merge with? Are the talks on currently? Any more details that you can share?
No, it's still very early. We are on the drawing board still.
Okay. In terms of Mr. Vasudevan, in terms of your cost of funds, how's that turning out? What was it this quarter? Has it moved up? And could you give us some sense? Interest rates are moving up, as Mr. Davis also pointed out.
Yeah. So interest rates, we have increased our deposit rates during the quarter, but our savings interest rate has remained the same during the quarter. So there is a small uptick of 5 basis points in the second quarter from 6.2. The cost of funds has moved to 6.25 in the end of second quarter. Going forward, there might be again a marginal increase in deposit rates because recently RBI has again raised the rates in end of September. But overall, we still believe that our cost of funds may not go dramatically high because we do have nearly a 48 to 50% CASA ratio, and there the interest rates are not really being tinkered with. So we are hoping that we will get away with a not so high a cost impact on our interest rates.
Mr. Vasudevan, since your resignation, has a new candidate for the MD and CEO role been identified? You resigned way back in May. So any kind of timeline on when a new MD and CEO will be put in place?
So we have already mentioned that we expect the process of succession to get completed in about a year's time. So I think more or less we are on track, and a lot of activities are happening. Obviously, there is nothing to disclose at this point in time. But yes, I think by May, June of next year, we should see the process getting to a completion, hopefully.
By May or June of next year. All right. Mr. Davis, we'll wait by for more details on this merger, but it's a big news, especially from both a bank and a shareholder perspective. You just want to tell us if merger talks are on with an NBFC or a bank?
No. We have not started any talks, so don't,
okay,
in that direction. As I said, it's still very early stages. We need to grow our secured book, and this is one of the options that is available to us. So it is still on the drawing board, and I think that is something that it should be clear to everybody that we have not started any discussion with anybody or not zeroed in on any options on this front.
All right, thank you very
early stages.
Got it. Thank you very much, Mr. Davis, Mr. Vasudevan. Appreciate you joining in, both of you, and congratulations on that anniversary as well. Thank you very much for joining us. Well, let's just look at the market, which has taken a very sharp dip. We're down 80 points, and most of this has come very, very sharply, very, very quickly as well. We were actually trading absolutely flat, but that is all but gone. And now, not at the day's low. The day's low was made at a little after 9:30 or so, at about 17,239. From there, the market's picked up a little bit, 20-25 points, but not looking good. The Bank Nifty is down a full 1%. That is at the day's low. The Nifty IT index is still doing a little better. It is down, but not down lesser. Market breadth negative now. 1,050 stocks are lower, and about 850 stocks are higher at this point in time. A lot of the pressure, of course, coming in from the currency markets. We'll take that break. We're back. The IT index is up 3.5% for the week so far, and this session, of course, is still remaining. We'll put the spotlight on what should we expect from the second quarter earnings. IT, of course, will be the first to report. Rima will be joining in to run us through what the expectations are, and then we'll discuss this with Manik Taneja of JM Financial Institutional Securities on the other side. Stay tuned.